We're going to review the accounting cycle. Start out, of course, by analyzing source documents. Then you have to journalize, create your journal entries. Next is posting to the ledger. Then create an unadjusted trial balance, followed by your adjustments and your adjusted trial balance. And you could be using a worksheet with these. Finally, it's time to create your financial statements. Then perform your closing entries, followed by the post-closing trial balance. And then there's an optional last step, reversing entries. And then you're back to the beginning of the next accounting period to start the accounting cycle over again. So what are source documents? Well, here are a few examples. A source document is just your proof that something did happen. You have to have source documents to prove it's not a fraudulent journal entry. And then, of course, as a review of accounting principles, you had special journals, in addition to the general journal. You had to learn how to foot or total your columns and then cross-foot, looking at the totals and making sure debits equal credits. Posting, you may post to the general ledger, the subsidiary ledger if you're using special journals. General journal is thought of as the controlling account, and then there, of course, you recall all the post-referencing rules, how they're different, a little different between the general and the special. Subsidiary ledgers, you can have accounts receivable, accounts payable, but some companies will also have subsidiary ledgers for their fixed assets. When do you post? Well, it's going to depend if you're using a general journal or special journals. Next, the next step is to create a trial balance, and this is your unadjusted, and the purpose is just to make sure debits equal credits, but does this mean there are no mistakes? You can still have some mistakes. Then perform your adjustments. There'll be accruals and deferrals, also called prepayments and estimates. Then perform your create your adjusted trial balance, again to make sure debits equal credits. Does this mean there's no mistakes? Then you're ready to create your financial statements and the 4 main statements. Or I should say the 5 main statements. Next is your closing entry. To be able to do these, you have to remember the difference between a temporary and a permanent account. For corporations, there will be no drawing account, no temporary drawing account, because withdrawals are in the form of dividends. Then finally, create your post-closing trial balance, again to make sure debits equal credits, but this trial balance has a secondary purpose, to make sure all your temporary accounts are closed. Now, does this mean there are no mistakes? Fortunately, no. So that is the review of the accounting cycle. It's important to remember it.